Welcome to the next module. In this module, I'll be going over swing trading, day trading, and then the liquidity concerns surrounding options as a whole. So first, with swing trading, I have defined it as longer than 1 day but less than 1 year is what I would consider a swing trade for options. This is my most common type of trading, and I prefer this one because instead of having to sit in front of charts all day, I can go out and do things as I please. If I'm working a job, if I'm hanging out with friends, doing stuff, I don't necessarily want to be looking at the charts. Like, for instance, if I'm on vacation, I prefer to be in my trades already instead of trying to day trade every single morning. So that's probably my preferred method of trading. But with this style, you are looking for temporary moves. So you're not looking to be in a trade for super long. I would recommend no longer than probably a couple months. I wouldn't recommend holding it for longer than like 6 months maybe. So I will show you a chart. This is kind of the process I go through in finding my swing trades and how I would go about doing it, so that you guys can see it in real time, where I would take my trades and how I would position myself for a swing trade. So if I pull up my chart here, one of the things that I will do is I will pull up my watch list. So right now I have the S&P 500 up, but typically I would do this with my watch list, and I usually go with like the Magnificent 7 stocks. So like Google, Amazon, Facebook, or Meta, Apple, and a lot of those other really good companies, Nvidia, AMD. So that's typically what I would do, is I'll just go through this list and I'll click here, okay? So right now I'm going through the S&P 500, but what I do is I look for consistent uptrends, okay? I usually I use a time frame that is pretty long, so I'll either do 1 year, 1 day, or I'll do 180 days in 4 hours. And these are the two time frames that I like using, but you can customize it however you like. And I'll usually just go down my list, and what I'm looking for is I'm looking for discounts. So this actually kind of sucks. So I only have a couple here, but what I'll do is I'll go through these and I'll look for discounts, okay? I'll say, okay, where can I find a discount? And then I'll also do it on the 1 year, 1 day. I'll just go down and I'll be like, okay, where do I see discounts? Okay? And typically what I'm looking for is pullbacks to the EMA, because let me add a couple more. So like a good example would be like Apple right now. It looks really good on the 1 year, 1 day because it has come back significantly from highs of 288. So it's on discount of about, let me see what that is. It's not showing me the percentage. It should be a discount of around 12%. So I'll scale into a smaller time frame. But what I can see here in this time frame that kind of concerns me is it has come back to the EMAs, so it'll come back and it'll go up. So that's good. It did it here. It did it here. It came back and it pushed up. It came back, pushed up, came back, pushed up. What I'm really looking for is stocks that are right here, okay? Because what I want to do is I want to enter here and I want to exit up here. So when I look at this move right here is about 8%, okay? But it's about $21 in movement. In options, you just take that delta and you'll multiply it by 21, and that's essentially where you can get your potential profit. So that's what I like doing, because this isn't going to be just 8% when it comes to options. Options, it can be significantly more. And this move was only about 11 days, 12 days. So that's ideally what you're looking for. See, for this one, it came down here, but then it pushed below, and then it tried to test the EMA again, but it got rejected and it came back further down. So this is kind of worrying to me because it doesn't look like it's going to retrace any sooner. There's a lot of downside potential. So I think it's going to reverse in a couple days? No, not really. But you can see with some of these that comes back to the EMA and it pushes up 12% in 12 days. This one came back down. I guess it came down here and it pushed up. That's about 7% in 10 days, but then it kept pushing up to about 15% in 20 days. So those are the moves that you're trying to get, is when they retrace back and then they push up. So Nvidia isn't as smooth as Apple. We know this, but you can see that SPY is pretty consistent when it comes to this. SPY does it here. SPY comes up and it goes up about 8% in 38 days. Comes down, goes up about 4% in 13 days. So you can see that SPY is extremely consistent, which is why I like trading SPY options. And you can also see that the chart is up and to the right. For the past 180 days, it's up 20%. Or sorry, this is the past, I guess, let's just say, this is 236 days. It's up about 20%. So your chances of losing money doing a swing trade is significantly lower with something like SPY. And that's why I like trading SPY so much, is because my chances of being right are so high. But what I'm really looking for is those discounts, those days where it has like a negative 1% day or something like that, because I know that SPY is going to continue going up and to the right for the most part. It typically does this. It doesn't always have to, so you have to be careful, and that's why you mitigate risk by using stop loss. The next thing that I do is, once I've identified something, let's just say that SPY has come back down to the EMA and it looks really, really good. Yeah, let's just use SPY. Let's say that SPY has come down and it's right here, right? The next thing that I'm going to do is I'm going to come into the options chain and I'm going to pick an expiration, okay? I like doing expirations that are typically further out. I don't want anything less than 90 days because I want all my options contracts sold before 90 days, because that's when you get the most theta decay. We talked about that earlier. So let's come out to January 2027. And what I like doing is I like coming all the way down, but I like picking something that's pretty close to the strike price. And if we go ahead and look at these options, so I'm going to send this option here so we can go ahead and look at it. If I go to my active trader, I can see, okay, I want more. I gotta go over here. Okay, open interest. So what I'm looking for is I'm looking for high open interest, and I'm looking for an option that is, oh my gosh, I don't have my settings right. I want delta to be relatively high, so I like the 60s and 70s, so I want it to be in here somewhere. So I know that I'm going for one of these. The next thing I'm looking for is something with a lot of open interest. So let's go to this one because this one has high open interest, okay? And I'm just going to show you the chart for it if it comes up. This is a 5-minute chart, that's why it looks like that. Oh my gosh. Okay, I had the time frame all messed up, but as you can see, this option for the most part, along with the price of the stock, so if we come back to what it looks like, we can see that it is up and to the right, and it's the same thing with the option as well. It's up and to the right. So the thing about options is they aren't going to be as liquid as the stock is, so that's why you see these gaps, and those gaps are just like when they close and then when they open the next day, they open higher. But if I look at my trend line, or if I take my tool, I can see that the low was about about $1,000. But look at the percentage right here. So you can see the percentage that the stock has increased, and look at how many days. Okay, so if we would have gotten it, if we would have purchased that option down here back in what's that, April. Let's see where the chart was in April. April of, what is this? April, I gotta go back even further, right? 1 year, 1 day. Okay, April. You can see that SPY was at a significant discount in April. This was like Liberation Day. This was when Trump was putting tariffs on everybody. This was a great time to buy options. I bought Google options down here and they absolutely printed. But what you can see is that, say you bought an option down here and you sold it up here. Or sorry, you bought stock and you sold it up here. That's about 38%. You can see it right there. It says 284 days, 195 bars, and 38%. Okay. But with options, if I go back and I look at the option, this option went up. Come on. This option went up 600%. That's literally insane. You could have taken $1,000 and turned it to $8,000, right? Like if you take $10,000, that turns into $80,000. Like you can continue doing the math from there, but it gets kind of nuts. So that's why I like swing trading. But um, where was my mind at? But yeah, I typically like doing something like this. Okay, is I like buying something that's around 0.6, 0.7 delta because I want to make as much money as possible. But I also don't want to go super expensive because these are extremely expensive up here. And if you look at the open interest isn't high at all. So what I want to do is I want to pick something with a lot of open interest. There's a lot of contracts down here with a lot of open interest as well. These have potential of doing extremely well because you can turn $300 into significantly more. But the strike price is $850. Right now, SPY is almost at $700. I don't like the chances of that, so that's why I like coming up here. So once we've identified it, we have a discount. Essentially, all we're going to do is we're going to buy it and hold it, and we're going to have our stop loss set. And I would say that the stop loss is relative to what you're willing to, I guess, lose per se. So say my take profit is at 200% on this. I want this to get to $16,000. I could put my stop loss at $4,000. So if this goes to $4,000, it just sells instantly and my loss is $4,000. But my take profit could be at $16,000 or it could be even further. It just depends on your risk tolerance and where you want to put your stop loss. But options move significantly more. So if you put your stop loss at 5%, the chances of it hitting are going to be extremely high. So I recommend you putting it a little bit further, and then you also putting your take profit a little bit further out. But once you've identified that essentially it's just getting into the trade, the next thing is just holding and waiting for the chart to reverse. You should keep an eye on it still. You should always keep an eye on your options just to see where the market is throughout the day. It doesn't have to be every single day, but just check the charts. Be like, okay, I don't like how this looks anymore. It's not going my direction. But still make sure to be level-headed because sometimes the trade will look like it's not going in your direction and then the next day flip. So it's just important to stay pretty level-headed. Make sure you're comfortable with your stop loss. But essentially, you're just going for those small moves of, it coming down here, and then you take profit in about 20 days. Because with options, this could be about 30 to 40% instead of just 4%. So that's typically what I recommend doing is just looking for discounts, buying at a discount, holding for a couple days, and then getting out. You should not hold until the option is until the expiration is less than 90 days away, because then you're going to lose so much value in your option, and you do not want to do that because then it starts to get dangerous. So you want to make sure that you sell it off before, if you're planning on swing trading options. let's talk about day trading options and what that looks like. Day trading options is essentially just making sure that the option is closed by the end of the day. So taking a position that day and then closing it the same day. And with options, I'll kind of go through how I would day trade an option because they're extremely risky. The reason I don't day trade options much is because they move so much. There's a lot of money that can be involved in it. A lot of money that can be made and a lot of money that can be lost. They're extremely risky, but you can honestly make a ton of money doing it if you know how to do it correctly. I don't have enough time to be able to do this actively every single day, so I don't really focus on it as much as my main strategy. But if I were to scalp, this is the best way, in my opinion, to do it. The way that I feel like a lot of other traders become profitable scalping options. And I don't want to get too much into it because I'm not an expert at scalping and day trading options, but I am pretty good at it. I do know how to do it. I just don't necessarily have the time to or the risk tolerance to handle day trading options. I might need to start with smaller accounts, but let's get into it a little bit. If you do decide that this is the strategy you want to take, this is the setup on my computer that I have for scalping. So first, it's mostly going to be in the trade tab. So you're going to come over to active trader, and this is the way that I would recommend having it set up. And the reason why I say this is because you can actively buy and sell positions extremely fast. So let me go ahead and put up an option on the screen. So if I go to all products and I go SPY, usually, let me put my camera up. Usually I'm going to pick an expiration that is the closest Friday. So I don't want to trade 0DTE options. I find them to be too risky and you lose a lot of, there's a lot of theta decay, and I'm going to show you that in just a second. So if you come over and you look at this option right here, look at the price of this option. It's about $80. But then also look at the theta decay. It's also $80. That means by the end of today, it's going to be worth nothing. Your delta is pretty good. It's about 50. So that means if the stock moves, you're going to make $50 on an $80 contract. So that's, I don't want to butcher it, but it's probably around, I don't know, 60%, 65%. So it's really good return if you do trade these correctly. But yeah, I just don't like the theta decay on these as much. So what I usually do is I'll come out to an expiration that's about 4 days away and I'll trade these instead. And I usually look for something that has high volume and higher open interest. So a lot of people like trading 0DTE options. As you can tell, the open interest on these is high, the volume is extremely high, and it's a little bit less over here, and even less so over here. So just for the sake of this, I'm going to send this to this one right here. And what I can see now is I can see this option in real time, okay? I can trade this option in real time now. The way to set up let me go like this, let me go like this. So in order to set up your desktop this way you're going to go 4 panels, okay? And you're going to click your level 2, that's this over here, and then you're going to click chart 3, and then it'll put the chart on the right, okay? Then down here, you're going to click your active trader and then your time and sales, okay? You'll also do the same thing on this side. And this is so that you can look at multiple stocks at one time. So if I wanted to trade Tesla, I could put Tesla here and I can look at it here. The way that I would trade, so I just want to go through an example of this, okay? If I click here, I have to show you my settings on here first, okay? So if I buy at the ask, if I click buy at the ask, what it's going to do is it's going to buy wherever there's buy at the price that people are selling. So it's essentially going to instantly fill me. Okay. If I buy market, it's going to buy me at the market price. So these should essentially be at the same level unless there's a large bid ask spread. This is going to sell me at the ask. So where all the sell orders are, I'm going to sell there. Okay. You can customize this by pressing configure. And this is what my current set looks like. So you can copy this, you can screenshot it, and you can copy. It looks the same thing for this, looks like the same for this side, but I have buy ask, cancel all, which is going to flat all my, or cancel all my orders, buy market, sell ask. And then the second line, I've got the quantity with buttons, so I can see how many shares I'm actually going to purchase. The order template selector. So, just this, I usually just keep it on single. Auto send on or off. So this is either going to auto send your trend or auto send your trade automatically. So if you have this clicked on, it's not usually, if I go like this is going to come up over here to the right. Okay. But if I click this, what it's going to do is it's going to send the trade instantly. It placed the trade instantly. Okay. So now I have a limit order for 221 on these options. Okay. So I just canceled it, but that's what this button does right here. Time frame is just going to be day. You're probably not going to be using good till canceled because it is a day trading setup. And then sell market is if you want to get out of your position, you're going to instantly sell. Okay. This is going to be like, get me out, get me out. You're going to press this. Okay. So that's how I have my settings on both sides. But what you can see here in the active trader is you can see the different prices for the option. So you can scroll up and you can scroll down and you can see where the option is currently trading at. For each contract right now, it's trading at $241 or $241 is the premium. And you can see that it moves pretty rapidly. Okay. The time in sales is just the orders placed, and then the price that they filled for. So you can see this over here. Right now I'm trading a SPY contract, okay? And let me choose this. This is so that you can watch the chart on SPY at the same time as you're trading. And you can also look at the level 2. So if you are going to day trade, the strategy that I would recommend is looking at the level 2 and using this chart to trade your options. So essentially what level 2 data is it shows you the resting orders. So you can kind of see into the future a little bit. And a good way to think about this is these are the people that want to sell their shares. These are the people that want to buy their shares. This number right here that you see will be multiplied by 100. And that shows you how many shares that they are wanting to sell. Okay. So if I multiplied this one by 100, it's going to be 460,000 shares. Okay. So that means that there's a sell order for 460,000 shares at 693 and 39 cents. Okay. So 603 and 39 cents. That means that there's a sell order for essentially 456,000 shares. And then if you come over here, this is the people that are buying. So you can see that there's a buy order for essentially the same amount, 460,000 shares at 692 and 90 cents, right? So 62 and 90 cents. I can see that there's a buy order right here. But essentially the best way to trade this is to look for key levels, essentially levels that have high sales volume and high purchase volume, and you are going to trade breakouts. So usually levels that are in increments of 10 are key levels. Like 690 would be a key level. You can see that SPY came down and it didn't push through this 690 level, but usually what you'll see is a ton of buy orders at 690 because it's a key level. Um, and usually price won't break through because there won't be enough sell orders to break that wall. So you have to think of this as a wall essentially. Okay. And if you see it start to get knocked down, that's a good time to enter a trade because price is going to break through. And that's why usually you'll see on a chart, the price will just break through a level and it'll just continue going. And it's like, oh my gosh, how did anybody know that price was going to push like that? Well, this is how, because they can see that there's a level right here, a key level with a lot of orders. And if it gets broken through, this number will slowly go down until it's broken through, and then the price will push up. So let me just show you how easy it would be to enter a trade right now. I just entered a limit. I just took a trade with a limit order at 223, and it just filled me right there for 5 shares. And I can do that. I can also do it with a market order. So if I wanted to buy market, it says instant buy. If I click it, it's going to instantly fill this. Because this is on a simulated trading account, there is lag. So, but on a real account, it would go through pretty much instantly. Okay. Now I have an average of 10. I have 10 contracts, essentially at an average price point of 222. So what I want to do is I want to sell them at, let's say, 223. Okay. So what I'm going to do is I'm just going to click, and now I have 10 orders that are going to sell at 223. So it should make me $10 if the price gets there and it fills me. But if I go over here to my monitor, I can see how much I'm up or how much I'm down with those contracts. So you can see that it moves extremely quick. It's going to move in increments of 10 because I have 10 contracts. But the price of the contract is only moving $1, and I lose $1 every single time. Like, it's super risky. You can make a lot of money doing it. But that's how I would trade essentially if I was planning on day trading, is I would wait for price to get up to a key level where there's either a lot of buy orders or a lot of sell orders. And what I would do is I would wait for price to start chipping away at that number, and say this 5,000 got down to about 1,800, 600, 500, and I saw it slowly go down. Then I would enter a position, I would wait for it to break through, and then I would sell my position. You don't want to be caught in these trades super long because theta is working against you all the time. That's essentially time decay, especially if you're trading 0 DTE. Every single minute that goes by, your option is losing value. So it's super important that when you are day trading, you're in and you're out. And that's why I dislike day trading. That's why I dislike day trading options in general, is for that reason. Obviously, I could do this with longer expiration options, but what's the point of that? I might as well swing trade it, take a 10% move instead of waiting for a 1% move. It really makes no sense, especially if I'm risking a couple $1,000s to do it. I might as well wait and make $1,000 profit. And as you can, like, showing you the chart right now, you can see where I entered, and you can see that the price is just going down significantly. It hit a key level, it wasn't able to break through, and then price is pushing down. So that also does happen. If price can't break through a key level, it's going to reverse. And if you look at my contracts now, I'm down $165 from 10 contracts. So I put $2,000 in, essentially, and now I'm down $200. So that's a 10% move just like that. Thank God this is a simulated account, but I literally lost 10% just in the matter of a couple minutes. So that's why it's super important to make sure you're paying attention when you are day trading. You can do the same thing with put options. If you think the stock's going to go down, you can do put options and you can make money. So it kind of goes both ways, but it's totally up to your risk tolerance and what type of trading you want to do. I recommend swing trading. Day trading is just, it looks super glamorous, but it takes a lot of work and it takes a lot of screen time. So if you're willing to dedicate time to doing that, then go right ahead. I'm not going to be teaching day trading because I don't do it as often, but it is a good way if you want to make some quick profit and you have a smaller account. There's plenty of YouTubers that have videos on how to day trade, how to watch the tape, but breakouts is probably the best way that I have seen people become profitable trading. You should not trade MACD, RSI, EMA, like all that stuff. You should not be trading it if you're going to day trade. If you're going to day trade, you should day trade options. You should be looking at level 2 and you should be reading the tape and just looking at those resting orders and key levels, waiting for breakouts essentially. One of the most important things to talk about is liquidity and the difference between stocks and options liquidity, because they are different. So if you don't know what liquidity is, essentially it's just how easily you can get into the market and how easily you can exit the market. So this is going to be different with stocks and options because a lot more people trade stocks versus options. So you always have to be able to make sure that somebody can buy your contract or sell your contract if you're trading options. So let's hop into the charts real quick. Right now um, I have my options chain open on Apple and I have 31 days until expiration. But if we go ahead and look at price at the 270 strike, you can see right here that there's a $10 difference between the bid and the ask. And essentially what this is saying is that if you were to buy contracts right here, oops, sorry. If you were to buy contracts right here, you would purchase them at $505, but then if you wanted to sell them right away, you would be selling them at $495. So you would instantly be losing $10 per contract. You don't want to do this. Well, you want to be careful of this because certain options will have higher liquidity than other options and they will have tighter bid and ask spreads. That's what that means. The bid ask spread is just the difference between the bid and the ask. That's all it is. It's pretty simple. So if we come into let's say SPY. Actually, we'll stick with Apple. Okay. So if we look at these options, we can see that the open interest is 800 and then the volume is 1. That's relatively low. I like having open interest that's higher because the bid ask spread is going to be smaller. If I come out further, the bid ask spread is going to be larger because the option contracts cost more. They're more expensive. So if I look at this one has that's about a $25 difference between this one. And that one has an open interest of 6,000. It's just the fact that the contract is more expensive is why there's a bigger bid ask spread. Okay? But if you go to an option that has low volume, not many people trading it, let's see if I can find one. Um, hmm. Let me see if I can like find something random. Recent. Let me type in random like I don't know what that is. Okay. Well, I don't know what this one is. Whatever this one is, it doesn't look like it has. Yeah, it's nothing's popping up for it. Okay. Here we go. Look at this one. I don't know if anybody's even trading these options. You can see that the open interest on this is super low. There's like next to no volume. But if you look at the bid-ask spread on this one, you have a $25 bid-ask spread here, but then you have a $10 here. You have $25 here. You have almost this is $80 here. Okay, so you can see that the bid-ask spread is definitely different. There's a $50 difference here. Like, you can just tell that nobody is trading this. Like, it's kind of dead almost. Like, I wonder if I come to this one, what it looks like. Okay, this one's actually not as bad. But yeah, you can see that the difference between this is literally $55. So if you were to buy here, you would instantly sell here, and wanted to sell, you would sell here, and you just lost $50. From 145, you literally just instantly lost $50. That's why you want the bid ask spread to be super, super small. I like only going for contracts with open interest at 1,000 if I'm going to do long-term contracts. If I'm going to do short-term contracts, if I'm day trading, I want the open interest to be at least 10,000. I want the volume to be close to 10,000, if not more. But I essentially want this bid-ask spread to be less than like $5. Anything more than that, I'm not trading it. If it's a day trade, I prefer it to be even smaller. If it's an option trade, if it's long term, I don't really care about it too much as long as the open interest is there and I can tell that people will buy the contract in the future. So that's something to especially look out for when you're trading stocks. So let me go back to Apple. You can see the bid ask spread if I go to my my active trader, or actually sorry, my level 2. I can see that the bid is 262.93 and the ask is 262.93. Like, the difference is about a cent. So there's so many people trading stocks that the bid ask spread isn't going to be a lot. It's probably 1 cent to 2 cent difference depending on the day and the volume, but it's relatively small. It honestly doesn't matter all that much because it's a cent, right? With this, you're talking about $5 to $10 on, quite frankly, contracts that are pretty close in price. Especially if you're trading longer term, it could be $50 difference, right? That's a huge bid ask spread, because if this was $50 difference, people would feel it. It'd be kind of insane. So that's why it's only about 1 cent to 2 cent difference, just because there's so many people trading it and there's a lot of volume. So that's just probably one of the biggest things to look out for when you're trading options, and just knowing the difference between those. I showed you how to find the volume and the open interest. Um, and I kind of talked through swing trading, day trading, and then now you know liquidity and how it works, especially when it comes to options. In the next module, I'll go into leaps options and what they are. They are going to be my personal favorite type of trading. This is how I was able to make over 6 figures this year trading options, was this strategy right here. My personal favorite strategy. Anybody can do it. It literally is probably the easiest thing in the world. Like, it takes no skill whatsoever. And I'm being genuine when I say this. It's probably the best strategy that I have been able to, I guess, find when it comes to trading. I wouldn't trade any other strategy um, if I had to pick one strategy to trade and I could trade it for the rest of my life. I would just trade leaps options. So I wouldn't even consider it a strategy, but I'll get into that more. But definitely my all-time favorite. So I'll go over that in the next module.